Hi everyone. So the big news in the REIT market over the past 2 weeks has really been Keppel DC REIT's announcement to acquire two data centers in Singapore. What I wanted to share with everyone today would be some of the key highlights of the transaction, what we need to know about the preferential offering, and what are some of the other key considerations for Keppel DC REIT's investors. Okay, so let us start by understanding a bit more about the two data centers that Keppel DC REIT is looking to acquire. They are called KDC SGP7 and KDC SGP8, located at Genting Lane in Singapore. I just checked Google Maps to understand where that exactly is, and it is near McPherson, for those of you who are wondering. Okay, what we also know about the data centers is that they are AI-ready hyperscale data centers, which means that they are ready to support some of the heavy data processing load that comes with the AI applications. They are also 100% contracted to global hyperscalers. This company names were not announced, but some of the global hyperscalers that we might be familiar with would include AWS by Amazon or Google Cloud. Okay, so quite a number of different companies that are the key clients of these two data centers. And what we can see here would be KDC SGP7 has 4 clients and KDC SGP8 has got 3 clients. Okay, we can dive a bit more to understand this transaction. So if I were to look at the total acquisition cost of the assets, it is estimated to be at 1.07 billion, and that actually makes it a very sizable transaction. Okay, if I were to look further into the asset, I mentioned earlier that each of them has got a number of existing clients. They have a contracted occupancy of 100%. What we see for KDC SGP7 is that it was completed and is currently 100% occupied. For KDC SGP8, they just received the TOP in August 2024 and are expected to be 100% occupied by the third quarter of next year. So with the clients that have already signed agreements for the space, that is why the REIT manager is actually confident to say that it has achieved 100% contracted occupancy. The other key point to note here is really the land lease that this data center assets are sitting on. They currently have a leasehold title which expire in July 2040, and that will leave 15.5 years of remaining lease life. Okay, there is an option to be able to extend the lease, and if that becomes something that is available, we will see that the land lease becomes 25.5 years compared to the 15.5 years currently. Okay, so that is something that we'll dive a bit more into detail later when we are looking at what is the financial impact from this acquisition. Okay, so what are some of the potential benefits that will come through from the acquisition? Keppel DC REIT has actually listed a few potential benefits, including how this will position the REIT in being able to grow their portfolio in Singapore, which is Asia's top data center hub. It is expected to be able to increase Keppel DC REIT's distribution per unit. What the REIT manager also sees would be the ability to drive further rental growth with these existing assets. Okay, first and foremost, we look at what is the potential impact to the portfolio size of Keppel DC REIT following the completion of the acquisition. So given that this is a fairly sizable transaction, the portfolio AUM of Keppel DC REIT is expected to grow to 5.2 billion from 3.9 billion currently when the acquisition is completed. More importantly, if you were to look at the contribution from Singapore, it will increase from 2.1 billion to 3.4 billion, and that represents a 67% increase in terms of the contribution towards Keppel DC REIT's asset under management. I mentioned earlier that the REIT manager also sees potential for some uplift in the rents that can be extracted from these assets, and that is because the current contracted rents for KDC SGP 7 and KDC SGP 8 are estimated to be at least 15% to 20% below current comparable market rents. So what the manager expects is that when some of these leases are actually renewed or actually given out to new tenants, there is a potential for them to be able to get higher rents from these assets. Okay, so why is the REIT manager confident of being able to get higher rents? That is mainly because we have seen strong demand for data centers in the Singapore market. Okay, this is really driven by increasing demand that is coming through from cloud applications and more of our data usage. And what we see here is that while the supply of new data center assets is growing over the next few years, the absorption of this data center assets has been fairly high as well. Okay, so what this means is that in terms of the utilization rate of the data center assets in Singapore, they are currently close to 100%. And even with the new supply that is coming up in the coming years, it is still expected to remain close to 100%. Okay, so for investors of Keppel DC REIT, I think what is something that many investors are looking out for is really what would this do to the distribution per unit. Okay, so we have a few different scenarios. The base case that we are looking at would be on an immediate basis. What is the immediate uplift to the distribution per unit? Okay, assuming the land lease of 15.5 years, which is what is the current status, what the REIT manager estimates is that the transaction can potentially help to boost the distribution per unit by 11.1%. Okay, but we are also looking at another potential scenario would be if the manager is able to extend the land lease by another 10 years. What will happen is that they will have to make a payment of about 350 million to the sponsor as well as to the JTC if this extension comes through, but it will bring about a few other benefits, including being able to enjoy the cash flow coming through from these assets over a longer period, being able to drive organic growth from existing or new contracts, as well as a potential capital value uplift. Okay, if that is the case, the potential increase in the distribution per unit that the REIT manager actually estimates will be at 8.1%. Okay, so a few different scenarios that we are looking at, both of which are fairly sizable increase in the distribution per unit coming through from this transaction. Okay, so I mentioned earlier that what we are looking at in terms of the acquisition cost would be at about 1.1 billion. If the lease extension is approved, then what we see as the estimated purchase consideration would be at about 1.39 billion. And if we were to include some of the other acquisition related expenses, the total acquisition cost would come up to 1.44 billion Singapore dollars. Okay, so how will this acquisition be financed? An equity fundraising has been announced to be able to finance this acquisition because the REIT manager expects to fund the transaction with 70% equity and 30% debt. So as unit holders, what you might be most interested in would be the preferential offering, where entitled unit holders will be given the right to buy 86 new preferential units at $2.03 each for every 1,000 existing units that are held. This comes after a private placement that has been completed, which allows institutional investors as well as accredited investors to purchase the shares at $2.09 per new unit. Okay, so with the equity fundraising that has been announced upon the completion, what the REIT manager expects is that the aggregate leverage of Keppel DC REIT will fall to about 33.3% on a pro forma basis. And with the lower leverage, what the REIT manager expects is that this will also allow them greater financial flexibility to be able to make other acquisitions if opportunities actually arise. Okay, so how has Keppel DC REIT's share price reacted? We see that following the announcement of the transaction, investors seem to take this fairly positively, where there has been a bounce in Keppel DC REIT's share price. We have already seen improvement in Keppel DC REIT share price since May this year. This is really a reflection of the increasing expectations of how interest rate cuts by the US Federal Reserve will help to improve the financing prospects of the REIT, as well as the improved outlook towards some of these tech companies, as well as demand for data center assets. Okay, you might be wondering, as an investor of Keppel DC REIT, what are some of the key considerations that we should bear in mind from here on? This is where we have often shared the Beansprout REIT investing checklist in terms of what are some of the key things that we would consider when investing in a REIT. So 3 of the things that we would look at would be the fundamental strength, the financial strength, as well as the valuation of the REIT in evaluating whether it is something that we want to be adding into our portfolio. Okay, so for fundamental strength, things like the tenant mix, the occupancy rate will be things that we'll look at. Financial strength will be the debt levels as well as the debt expiry profile. And for the valuation, we'll be looking at the price to book valuation as well as the dividend yield of the REIT. Okay, so having looked at how this transaction can potentially impact the distribution of the REIT, I think the other key thing that we have also to look at would be the valuation of Keppel DC REIT. So where can we look for the valuation of Keppel DC REIT? This is where I will bring you to Beansprout's REIT analysis tool, where you'll be able to get some of these details on what the valuation of the REIT is. Okay, so what I'm going to show you next will be how we can use the stock tool to be able to better analyze a REIT like Keppel DC REIT. So what you can do is to go to Beansprout's website, search for Keppel DC REIT in the search bar, and you will be brought to the stock page where you'll be able to get the latest insights, news, as well as analysis on Keppel DC REIT. So I shared earlier that one of the things we would consider would be the fundamentals of Keppel DC REIT. So that is where you can use the checklist to be able to access the latest financial metrics of Keppel DC REIT and see how does that compare to industry benchmarks. But what I want to do here is to dive into the valuation of Keppel DC REIT in more detail. Okay, so I mentioned earlier that one of the key things that we will look at would be the price to book ratio. And what we see here is that given the bounce in Keppel DC REIT share price over the past few months, the price to book valuation is now at 1.61 times, which is above the historical average of 1.36 times. Okay. Next, we can also look at the dividend yield of Keppel DC REIT and see how does that compare to its historical average. Okay, so what we see here for Keppel DC REIT is that the dividend yield is at about 4%. And in case you're wondering how does that compare to the historical average, in the past, the historical average for Keppel DC REIT would be at about 4.7%. So what this means is that the dividend yield for an investor of Keppel DC REIT now is actually below the historical average. Okay, so those are some additional factors that we would bear in mind when evaluating a REIT. Okay, so let us go back to the slides to take a further look at what are some of the other considerations that we need to bear in mind as an investor of Keppel DC REIT. Okay, so I think this is something that is applicable for any investor of a REIT. We have seen that interest rate as well as bond yields have been a very key driver in terms of what has been moving the share prices of Singapore REITs. And this is something that we will continue to track. So what we see in terms of the Singapore government bond yield is that they have fallen sharply from the start of this year towards September in anticipation of the US Federal Reserve interest rate cut. So we have seen the US Federal Reserve announcing 2 rate cuts so far, one in September and one in November. But what has actually happened since then is that given investors are now expecting that the US Federal Reserve will not be cutting interest rates as sharply as what was previously anticipated, interestingly, the Singapore government bond yield has actually bounced over the past 2 months. So the trend that we have seen is that it has reached a low of about 2.4% in September. But since then, it's actually rebounded. And when I last checked, it was at about 2.8%. And that has actually explained why some of the REITs in the Singapore market has fallen over the past few weeks. So that is something that we'll also continue to monitor to be able to understand whether the share prices of Singapore REITs will continue to face headwinds, or we might actually start to see a recovery if the bond yields start to fall. Okay, if you're wondering how you can keep updated on the latest trends in interest rate and bond yields, you can subscribe to our Beansprout newsletter, where we provide a weekly update on where some of these latest interest rate trends are actually looking like. Okay, or you can visit our website, growbeansprout.com, on a regular basis to be able to get the latest updates on interest rates as well as on Singapore REITs. Okay, so in a nutshell, what we have seen is Keppel DC REIT's announcement that it is looking to acquire 2 data centers in Singapore. What unit holders need to be aware of would be the preferential offering that has been announced, where existing unit holders will be given the right to buy 86 new preferential units at $2.03 each for every 1,000 existing units that are held. What we have shared is that some of the positives from the transaction include the potential to grow the distribution per unit in both scenarios, whether there is an extension of the land lease by another 10 years or not. Given that it is a fairly sizable transaction, the portfolio of data center assets held by Keppel DC REIT is expected to grow, especially in a key data center market like in Singapore. The REIT manager also sees potential for further rental uplift, given that the existing rents for the data center assets are below market rents. At the same time, some of the other things that we'll be looking out for include the valuation of Keppel DC REIT. What we have seen is that the current dividend yield for Keppel DC REIT is below its historical average. At the same time, something to be mindful of for all REIT investors is that the bond yields will continue to impact the sentiment towards Singapore REITs. Okay, so that is our update for Keppel DC REIT's acquisition of the two data center assets in Singapore. If you want to be updated of key developments within the Singapore REIT market, do subscribe to our YouTube channel where we'll provide you with further updates on the Singapore REIT market. The usual disclaimers that today's sharing is for information purposes only and should not be taken to be financial advice.